This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending December 10th, 2022. Our question this week is, what is EBITDA? The answer will be provided later in the video. This week, the market ended lower. The Dow Jones Industrial Average decreased minus 0.9% on Friday and was down minus 2.77% for the week. The S&P 500 decreased minus 0.73% on Friday and was down minus 3.37% for the week. The Nasdaq decreased minus 0.7% on Friday and was down minus 3.99% for the week. Looking at the week, we can see that there were 4 up finishes versus 11 down finishes for the major indexes. On Monday and Tuesday, all the major indexes finished down. On Wednesday, the Dow Jones Industrial Average finished up, while the S&P 500 and the Nasdaq finished down. On Thursday, all the major indexes finished up, and on Friday, they all finished down again. New unemployment claims were 230,000 versus 230,000 expected. Wholesale prices rose 0.3% in November. The 30-year fixed mortgage rate declined to 6.33%, while mortgage demand fell 3%. The European Union officials set a Russian oil price cap at $60 a barrel, and the House passed a massive $858 billion defense bill. New unemployment claims, wholesale prices rising, mortgage rates declining, mortgage demand falling, the European Union placing a price cap on Russian oil, and the House passing an $858 billion defense bill are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now, we are at our question of the week. What is EBITDA? That is EBITDA. EBITDA is an acronym that means earnings before interest, taxes, depreciation, and amortization. An income statement is a financial statement that shows how profitable a company has been over a period of time. Revenue is gained from sales, and expenses of running the business is deducted from revenues to get to net income or net profit. There are several expenses that businesses incur, including cost of goods sold, selling expenses, general and administrative expenses, interest expense, taxes, depreciation, and amortization. Because investors and other interested parties want to know how well a company operates, excluding some of the more uncontrollable and or unpredictable expenses like taxes and non-cash expenses like depreciation and amortization, EBITDA is calculated and used by investors. Investors often use EBITDA to compare businesses across different industries. For example, to compare a tech company to a retailer or a biomedical company with a commodities producer. They may have similar operating expenses, however, they often have very different tax, interest, depreciation, and amortization treatments. So to isolate operating expenses, EBITDA is calculated by adding back depreciation, amortization, interest expense, and income taxes to net income. Do you use EBITDA to decide whether to invest in a retailer or a pharmaceutical company? Do you own the stock of a biomedical company as opposed as to the stock of a commodities producer? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you're going to have to teach yourself. You must RSI, that is read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to become an investor. And they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is the Southside trading watch list from the week ending December 10th, 2022. The strongest performer on the list this week was iShares Silver Trust, ticker symbol SLV. It's in the second column. It was up 1.65% on Friday and increased 1.27% for the week. SLV is an ETF that seeks to reflect at any given time the price of silver owned by the fund at that time, less the fund's expenses and liabilities. Looking at a summary of results, you can see that SLV has increased only 0.23% year to date. I did not trade SLV this week, but I have traded it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside Portfolio Cash Flow System is outperforming the S&P 500 Index ETF SPY. The Southside Portfolio is up 3.22% versus minus 17.2% down for SPY, a difference of 20.42%. The Southside is beating SPY by more than 20%. The cash flow generated by the Southside cash flow system for this week was 5.13% of the portfolio account value. The account value changed by minus 8.09%. Meanwhile, the S&P 500 ETF SPY changed by minus 3.35%. Bitcoin watch. Bitcoin gained 1.08% this past week, but it continues to be in a bear market. It is down more than minus 75% from its all-time high, which was achieved in November 2021. I sold option contracts on 2 positions this week. They were both puts that range from $61.35 to $100.69. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for questions of the week. The videos are organized in playlists, levels 1, 2, and 3. Level 1 for beginners, level 2 is for more intermediate, and level 3 is for more advanced investors and traders. The videos are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.